Hi guys. Today we will analyze Baxter International stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also recent evolutions are not positive. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Strong support levels are around $50 and $44. Next strong support level is around $35. Strong resistance levels are around $70 and $77. Next strong resistance levels are around $81 and $88. In the last month the stock has been trading between $58 and $67 range. It is currently trading near the lows of this range. The stock has an average volume of 2.9 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 5% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 126% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Baxter International Company: bad, average, and good. First scenario. Baxter International will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 3%. Future profit margin would be a low, 9%. Future free cash flow to net income rate would be a low, 90%. In this case, the fair value of the stock today would be $75. Second scenario. Baxter International will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 9.5%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $87. Third scenario. Baxter International will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 5%. Future profit margin would be high, 10%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $101. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.0. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Baxter International, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 15. Again, I will use 3 different scenarios for Baxter International Company: bad, average, and good. First scenario. Baxter International will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 3%. Future P/E would be a low, 15. In this case, the fair value of the stock today would be $17. Second scenario. Baxter International will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 17. In this case, the fair value of the stock today would be $21. Third scenario. Baxter International will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 19. In this case, the fair value of the stock today would be $25. As you can see, today the stock is overvalued, $58, even if we expect the company's high performance in future. While the company has an average profitability rating, there are some concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6% yearly. Keep in mind that the stock has been in a strong downward trend since January 2022, and it can go lower, before it recovers. Do your due diligence on this stock. The stock may be fairly valued at current levels, $58, but I would wait for signs of reversal, before buying the stock. The stock's technical picture is awful at the moment. Company's strengths. Baxter International is an American multinational healthcare company that focuses on products to treat kidney disease and other chronic and acute medical conditions. Baxter's BioScience business produces recombinant and blood plasma proteins to treat hemophilia and other bleeding disorders. Baxter's medical products business produces intravenous products and other products used in the delivery of fluids and drugs to patients. Baxter has dug a narrow moat around providing dialysis and injectable therapies through complex delivery systems. Baxter has recently completed the acquisition of Hillrom, a medical technology provider. Management believes that the acquisition will help the company to improve patient care and drive efficiencies across care settings. Baxter continues to advance its pipeline. The company has recently announced FDA clearance for its SD set for the hospital treatment of acute kidney injury patients. Emerging markets are a prime source of growth for many of Baxter's products, especially its peritoneal dialysis and nutrition solutions. The company's return on assets of 3%, return on equity of 12% and profit margin of 8% are better than the industry average. Risks. While Baxter's broad product portfolio has helped to offset declining sales in certain categories, results have recently been uneven, with slow growth in the largest segment, renal care, over the past 3 quarters. Debt has also risen substantially over the last year. The stock has been in a strong downward trend since January 2022, and it's cheap for a reason. So, it's advised to wait for signs of recovery in the renal care segment, balance sheet improvement, or the launch of new products. Baxter faces regulatory risk. Many of its products are subject to approval by the FDA, and by regulatory agencies in Europe and other markets. These products are also subject to reimbursement coverage decisions by insurers. Baxter also faces economic and exchange rate risks in its overseas businesses. The company also faces risks related to the coronavirus pandemic. As many of the company's products are used in a hospital setting, new virus variants and new waves of the virus in many countries could lead to additional business disruptions. Baxter also faces intense competition across its products. Although Baxter's products are essential for medical care and patient health, many have similar alternatives, which can limit pricing power. The company has a high debt level. Moody's and S&P lowered their credit ratings on the company, following its December 2021 acquisition of Hillrom. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6% on average per year. The earnings per share is expected to grow by 12% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.